Hello, my students, and hello, everyone. This is Teacher Angel, and this is our intermediate accounting online lessons. So, for today, I will be talking about the depletion. This is a continuation of our lesson in exploration and evaluation of mineral resources, or the accounting for the wasting assets. So the depletion is an important section in the accounting for the natural resource. So what is depletion? Depletion refers to the removal, extraction, or exhaustion of a natural resource. If you can still recall what is a natural resource, so a natural resource or a wasting asset are material objects of economic value and utility to man that is produced by nature. It is both physically consumed and are irreplaceable. Now, just like the PPE, the property, plant, and equipment, and also the intangible assets, we need to allocate the cost of the asset. So in allocating the cost of the wasting asset, we call it as the depletion. So depletion is a systematic allocation of the depletable amount of a wasting asset over the period the natural resource is extracted or produced. It is recognized as the cost of the material used in the production and thus becomes the finished product of the extractive entity, since the wasting asset is conceived as the total cost of materials available for production. So the same treatment with depreciation, you're going to deduct the depletion against the asset to get the carrying amount of the asset. So to compute the depletion, we're going to use the output or the production method. If you can recall our lesson in property, plant, and equipment, there are many ways on how we can depreciate the PPE. The very common is the straight line method, but there are also other methods that can be used. If you can still recall, we have the sum of the year's digits. We also have the declining balance method. We have the production method. We also have the service hours method. We also have replacement method, and so on. For the depletion, you can use the output or the production method. So how to compute the depletion using the output or production method? It's equal to the total cost of the wasting asset minus the estimated residual value, and this is what you called as the depletable amount. Okay, so this amount here, if you're going to name this one, this is your depletable amount or depletable cost, just like the depreciable amount, okay, or the depreciable cost. So you have the depletable amount, depletable cost, divided by the units estimated to be extracted. So it's estimated because we are not 100% sure that this is really the exact number of natural resource or deposits that can be taken out from the property. We will know the approximate amount or approximate units as we extract more of the minerals in that area. Okay, so again, the depletable cost or the depletable amount will be divided by the units estimated to be extracted, and then multiply it by the units extracted during the year. So the total cost of the wasting asset, if you can recall earlier, as mentioned, it is a sum of your acquisition cost, exploration cost, intangible development cost, and the estimated restoration cost. We have an illustration here. During 20X1, ABC Company acquired property with mineral deposit for 15 million. The property had a residual value of 500,000. However, ABC is legally required to restore the property to its original condition at a discounted amount of 2 million. Geologists estimate that 2 million tons are to be extracted. Tons extracted total 250,000 in 20X1. First question, what is the depletion to be recognized in 20X1? And second requirement, prepare the journal entries in 20X1. To get the depletable cost, again, you need to get the total cost of the wasting asset. Then you're going to deduct any residual value. We're going to follow this formula. So let's take out the data needed to compute for the depletable cost. We have the acquisition cost, which is 15 million. Then estimated restoration cost, we have 2 million. Okay, we don't have any exploration cost mentioned here and intangible development cost. That's why we have these two items as part of the cost of the acquisition. Next is deduct the residual value to get the depletable cost. Now apply the formula 16,500,000 divided by 2 million tons times 250 tons extracted. So the depletion for the year is 2,062,500 pesos. Now let's prepare the journal entries. We have debit mineral deposit or the wasting asset, or you can specify what type of wasting asset it is. So we have mineral deposit 15 million, credit cash 15 million. Then another entry to record the estimated restoration cost. So debit mineral deposit 2 million and credit estimated restoration cost, or you can also call it as asset retirement obligation 2 million. Then to record the depletion, so debit depletion 2,062,500 and credit accumulated depletion 2,062,500. How do we present the depletion and the wasting assets? So in the income statement, depletion is classified as part of the cost of production or the cost of sales. In the statement of financial position, we're going to show the mineral deposit as a separate line item. So we have mineral deposit, you have 17 million. So where do we get our 17 million? That's the sum of the 15 million and the 2 million. 15 million acquisition cost and the 2 million restoration cost. Deduct the accumulated depletion of 2,062,500. So therefore, the carrying amount of our wasting asset or mineral resource is 14,937,500. Okay, next is we have the revision of the depletion rate. So not frequently, the original estimate of the resource deposit has to be changed either because new information is available or because production processes have become more sophisticated. So the revision of the original estimate of the recoverable resource deposit gives rise to the same problem faced in accounting for change in estimate concerning the useful life of PPE. Changes in estimate are to be handled currently and prospectively if necessary, meaning during lang sa year of change pwede tang mag-change sa to ang application, but the previous years na na-recognize na nato ang depletion, dili na nato to siya hilabtan. Accordingly, the procedure is to revise the depletion rate on prospective basis, that is by dividing the remaining depletable cost of the wasting asset by the revised estimate of the productive output. So let's go to this problem. A wasting asset entity has acquired the right to use a property to explore a natural resource. The acquisition cost is 3 million and the related exploration costs amount to 2 million, and we have the development costs incurred in erecting wells and drilling the deposit are 5 million. So the total cost of the wasting asset is 10 million. It is estimated that the resource deposit is approximately 1 million units. If there are 250,000 units extracted in the first year of operation, what would be the depletion for the year? So following the formula that we have, the total cost of the wasting asset is a sum of the acquisition cost, the exploration cost, the development cost, intangible development cost, and the estimated restoration cost. In a given problem, we have the acquisition, exploration, and development costs only. So the depletable cost totals to 10 million. There are 1 million units that can be extracted. So 10 million divided by 1 million times the number of units extracted in the first year of 250,000 tons. So the depletion is 2,500,000. Assume that in the preceding example, additional development costs of 3,750,000 are incurred in the second year, and the recoverable deposits are estimated to be 1,250,000 units at the beginning of the second year. So this time, the cost of the wasting asset is increased by 3,750,000. And there is a change in the estimate. Originally, before extracting anything from the property, the approximate units that can be extracted is 1 million units. But during the second year, at the beginning of second year, there is a revision of the units. We have 1,250,000 units. So that's remaining before computing the depletion for the second year. So from the start of the second year and then thereafter, in total, 1,250,000 units ang pwedeng ma-extract. So what would be the depletion rate in the second year? So we have the original cost of the wasting asset. So this is already provided in the previous example. So that's 10 million. Add the additional cost of 3,750,000. So the total is 13,750,000. Deduct the previously recognized depletion. So this is our remaining depletable amount. So what would be the depletion rate? So 11,250,000 divided by 1,250,000 units. If wala nag-revise sa recoverable deposits, pila man dapat ang ibutang diri. So if there was no revision, we go back to the original information. So kung 1 million tanan-tanan ang pwedeng ma-extract from the property and naka-extract na to og 250,000 units, therefore ang remaining, ang nahabilin, supposed to be is 750,000 tons. Okay? But na-change mo ng estimate. So from second year onwards, the total deposit would be 1,250,000 units or 1,250,000 tons. Okay, sorry. This is only units pala. Units, not tons. So 1,250,000 units. So therefore, 11,250,000 divided by 1,250,000 units, that would be 9 pesos. So if there are 300,000 units extracted in the second year, so therefore our depletion is 300,000 units times 9. So that would be 2,700,000. How about if there are other tangible properties or tangible items that are being used in the exploration and evaluation of the mineral resource, like transportation equipment, heavy machinery, mine shaft, and other equipment. As we have mentioned previously, as part of the development costs, so we have two development costs. We have the tangible and the intangible um, assets. So only the intangible development cost will be capitalized as part of the mineral resource, and the tangible equipments will be classified in a separate account and will be depreciated like the PPE. So therefore, these tangible equipment will not be added to your mineral resource but separately depreciate them. So generally, the depreciation of the equipment used in mining operations is based on the useful life of the equipment or the useful life of the wasting asset, whichever is shorter. If the useful life of the equipment is shorter, straight line method of depreciation is used. So first rule here is you are going to base it, the depreciation is based on the useful life of the equipment or the useful life of the wasting asset. So first priority is you get the useful life of the tangible equipment and the useful life of the wasting asset. So whichever is shorter, okay, whichever is shorter, so it depends po kung kasi mas shorter. If the useful life of the equipment is shorter, so this one is shorter, okay. So if this is shorter, then you're going to use straight line method. What if this is shorter, the useful life of the wasting asset? You're going to use the production method, the same way that you compute the depletion of the wasting asset. Okay, again, if the useful life of the tangible equipment is shorter, the depreciation is straight line method. But if the useful life of the wasting asset is shorter, you're going to pattern the manner of depreciating the tangible equipment based on the manner of computing the depletion of the wasting asset. Thus, we will follow the production method, or also known as the output method. But if the mining equipment is movable, meaning it can be transferred from one place to another and can be used in future extractive projects, so dili lang para sa ani nga extraction or ani nga wasting asset activity, then the equipment is depreciated over its useful life using the straight line method. So again, we have to determine first the useful lives of the tangible equipment and the useful life of the wasting asset, whichever is shorter. Why is it that we're going to determine whichever is, if ever is shorter? For example, the equipment is good only for 3 years, but the wasting asset is good for 5 years. Okay, so 2 versus 5. So you're going to depreciate the tangible equipment, of course, sa life sa tangible equipment, because it will no longer be operational, or it might no longer be used or functional by the end of 5 years, which is the life of the wasting asset. So it's not proper na nag-depreciate ta pero urot na ang life sa ato ang tangible equipment. What if opposite, mas taas ang useful life sa tangible equipment kaysa sa wasting asset. Remember that you acquired the tangible equipment in relation to the wasting asset. So it's also inappropriate that you keep on depreciating the tangible asset, then the wasting asset no longer exists. So, na po ka mag-depreciate based on the life of the wasting asset because it is shorter. And remember, if the mining equipment is movable, or you can use it in a future project, then you're going to depreciate it using straight line method, basing on the useful life of the asset itself. So, dili siya i-base sa wasting asset because kung imong hunaw-hunaon, independent siya, ay pwede pa man siyang magamit in another project. Example, a natural resource deposit is estimated to contain 450,000 units. Heavy equipment necessary to extract the deposit is acquired at a cost of 9 million. The useful life of the equipment is 10 years. If it is estimated that 30,000 units will be extracted each year, then the deposit will be exhausted in approximately 15 years. Why 15 years? Because if 30,000 every year, kada tuig, and total units that can be taken out from the property is 450,000 units, how long will it take for you to fully extract this 450,000 units, considering na kada tuig 30,000 units ang pwedeng ma-extract? So it will take you 15 years approximately. This is longer than the 10-year useful life of the equipment. So remember, the rule is you have to determine which life is shorter, the equipment ba or the wasting asset. So since the asset, the equipment has a shorter life, then, diba, you're going to use straight line method. So the equipment will be depreciated over 10 years using straight line method. So 9 million divided by 10 years. But what if it is estimated that 50,000 units would be extracted each year? So 450,000 divided by 50,000 units. So that's more or less 9 years, which is shorter than the 10-year useful life of the equipment. So therefore, since the life of the wasting asset is shorter, then we're going to use the production or the output method. So therefore, 9 million divided by 450,000 units times 50,000 units, then that would be 1 million. When the output method is used in depreciating mining property, in the event of shutdown, such method cannot be used. In this case, the depreciation in the year of the shutdown is based on the remaining life of the equipment following the straight line method. The remaining carrying amount of the equipment is divided by the remaining life of the equipment to arrive at the depreciation in the year of shutdown. Thus, in the preceding example, if there is shutdown in the second year, the depreciation would be 9 million minus the 1 million we have computed earlier. The carrying amount at the beginning of second year is 8 million divided by the remaining life of 9 years. So, we're going to follow the remaining life of the equipment and depreciate it using straight line method. So the depreciation would be 888,888. When operations are resumed, the depreciation is again computed following the output method. But in such case, a new depreciation is again computed by dividing the remaining carrying amount of the equipment by the remaining or revised estimate of the deposit. Thus, if in the third year, operations are resumed and 60,000 units are extracted, the depreciation will be computed as follows. So you have 9 million minus accumulated depreciation. This is 1 million for year 1 and 888,888 in year 2 when there was a shutdown. The carrying amount at the beginning of third year is 7,111,112. Then we have the remaining estimate of deposit. Diba, originally there are 450,000 and we have extracted 50,000. Remaining deposit is 400,000. To get the depreciation using the production method, so 7,111,112 divided by 400,000 units times 60,000 units extracted. So that is equivalent to 1,066,800.
If you like this video, don't forget to click like, subscribe, and hit the notification bell to be updated with the latest video lessons. Thank you for watching.